Good afternoon. Welcome to the weekly take on the market. Today is Friday, November 21st. I'll be your host. It's 1:05 p.m. So Pacific time. The market just closed. I'll be your host. My name is Scott St. Clair. I'm the manager of the Premium Product Group here at Investors Business Daily. Take a moment to read the disclaimer. Not licensed. Can't tell you what to buy, what to sell, what to hold. Some of you email us asking what we think about XYZ, ABC, DEF. We're just stuck. It's not that we might not have thoughts on it, but we got to give you a canned compliance answer. I know it's not what you're looking for, but it's the proper procedure. It's a great place to work if you love markets like I do. So I want to continue to work here. So that being said, I appreciate it. Thank you. Okay, we'll do the market indices. We will do good trade, bad trade. I'll do a couple of those. Stocks to watch, and then quote of the week. Pretty much the same drill. Makes it easy for me to put this together. So I'm going to turn my camera off so you can see the charts a little bit better as we go through them. I only had one cut and paste. How I get these, I think I've mentioned it before, is Substacks, Twitter, YouTube videos, podcasts. Just have a lot of I have a lot of irons in the fire, and I don't watch them all. I don't read them all. A lot of the Substacks are, they'll give you a little snippet and then they want you to pay. There's only one Substack that I pay for. It's not that they're not all valuable, but I figure if I pay for it, I'm going to watch and or use it, and so there's just no way I can pay for all the ones that I look at. So give me a handful of ideas and just kind of keep me engaged and like an overall 20,000 foot view of the markets. Here's Berkshire Hathaway and their cash as a percentage of total assets. Now they say history doesn't repeat, but it rhymes. This is very much what was happening in the 90s, the late 90s. Fairly certain that Buffett was on the cover of Fortune or Forbes. It was one of the F magazines. And I can't recall the header. For some reason, I want the header. I believe the header was "His Buffett lost his way." I believe that's the case. Anyways, he had not participated in the the tech boom. And, he was wrong, and then he was right. And so maybe that's what's going to happen here. He's going to be wrong, and then he's going to be right. And that's the hard part, is when is he going to be right? Is this 1996? Is it 1998? Is it 1999? Is it 2000? Is it none of those? It's really, really difficult. It feels like it has a lot of the trappings in the same kind of look and feel of that time frame, but it'll probably play out different, because then it'd be too easy if it played out exactly the same. So there's that. All right, I think that's my only. Yeah, okay. So let's go to the indexes. Let me reshare, because I just make sure you can see that, because I'm just pulling it over from another monitor and I'm always afraid it ain't going to show up. All right, so you should see the NASDAQ composite, and yesterday was quite a day. NVIDIA had a really good quarter, and I'm always a bit of a skeptic. Fortunately or unfortunately, I'm not sure that the quarter was really, really good and everything was fantastic, but I don't feel like the market was expecting anything but. And the market is all about expectations, and this is why, like, the average person, so to speak, gets confused by the market initially, because it will go the opposite way of what it seems it should. In other words, it can go down on good news and it can go up on bad news. So yesterday's reversal did not surprise me at all. The veracity, is that a word? Veracity? The ferocity. I used a combination of velocity and ferociousness. I think I created a word. So it was bad, right? And I was long and short, and there I can't remember what time it was. Let's say maybe, well, let's look at the chart on the intraday. So this is yeah, so it opened, and it was probably this bar. And that bar is what? Nine, yeah, is that, yeah, 9 a.m. for me, 12 p.m. Eastern. That bar just had me totally spooked and panicked. And I was just going across all my accounts and just wholesale dumping. It was the one time, and I don't even have that many positions. I think I own maybe four stocks long. It was the one, but if you own four stocks across, 10, 12 counts, that's, 42 trades or whatever, 40 some trades. And I want it out immediately. So I know Interactive Brokers has, they have a, close 50% button or close 100% button, which is kind of cool. If Thinkorswim has that, I'm not aware of it. And so it was the one time I was like, if they had a close 100% button, I would just hit the bid. But I didn't want to close my shorts though, so that maybe that could have caused an issue. So, anyways, I felt it there. I remember thinking I'm probably panicking because I felt I was a bit of like emotional about it. Like I felt like a bit scared, like the market was just going to come unglued, close on the lows, and then have a terrible Friday and then crash Monday. Right? It was that kind of feeling, which usually when I feel like that, it's, you're at or near the low. Although we did go lower, but today I think maybe half of the stocks I sold, compared to today's action, I probably sold poorly. I don't know. It is what it is. I'm just going to do that over and over and over to protect myself. Most of the time, I'm going to be wrong. One or two times out of 10, I'm going to save myself a ton, and that's it's like an insurance policy. So you had a really bad break yesterday. We'll look at NVIDIA, but you can see like NVIDIA opened higher, and then it broke really bad as well. So yesterday was a bad day, and IBD went from, I think maybe for the first time ever, they went from uh six was it oh was it 40 60 to 0 20 versus 20 to 40, which is the standard way to do it. And I don't know. I mean, I don't blame them for doing that. It was a pretty bad day, but as usual, the market tends to kind of fool us. And today's day was pretty good. It wasn't great. At one point, it was great. Let's go back to the indexes. And you see, at one point, it was I think it was up almost 2%, maybe 1 3/4. It closed up 0.88. So it was an okay day. It wasn't great. You're below the 50-day. So I don't think the market's out of the woods just yet, but we'll have to wait and see. So here's the S&P, and you're below the 50-day. And remember, tops are a process. It's bottoms are usually much faster. So look, here's the bottom, boom, just boom, boom, boom. It's just the nature of markets, greed and fear, and most of the money out there is long, is needs to be long, has to be long. So when the market has that feeling of having bottomed, it's a mad dash to get in. Getting out is a slow, gradual process normally, because they really don't want to get out, nor can get out the big money. A lot of the big money is has to be in. So it's more of a rotation, which is why you've seen so much damage in like some of these really big growth stocks. Yet the indexes, I mean, what's the S&P? I mean, is it 5% off the high? Let's go to the SPY. 5.2% off the high. The NASDAQ is 8% off the high, but it feels like 18 to 25 based on some of those stocks. So S&P, NASDAQ, what did Russell do today? Had a pretty good day, I guess. Got back a lot of yesterday's action, up 2.85%. Gold, I mean, it looks like it's nice little cup with handle. 20 years ago, I'd have said this is a cup with handle. Now I can't say that because it's too short, but it sure looks like one. And I've got like, a little trend line there. Will I buy that? I don't know if I will or not, but it's setting up pretty good. It's holding up pretty good. Crypto has gotten embarrassed, and it's, I was calling it the canary in the coal mine, and I think it was. I think it broke first, and now the market's catching up. So you're down 33% on the IBIT. I presume that translates fairly closely with Bitcoin. And then Ethereum, ETHA, is that right? Yeah, is almost in half. So it's been I don't know if I'd call it a bloodbath there, but it's been pretty bad. I wouldn't want to be in those areas, that's for sure. So they've foretold the kind of the weakness in the overall market, and it's, if you look at stocks versus the stock market, it's been a pretty bad market. The Oklos of the world down 50%, I would guess. 54%. How about like Quantum, Rigatoni down 59, IONQ down 50, and so on and so forth. So it's they've gotten to these stocks pretty good. So let's, as far as like the IBD methodology, ideally we would get a follow through day. So this would be day one, and day two, day three, day four, day five, day six, day seven, something like that, and that would take them um, up in exposure. But the nice thing with why we switched to this zero versus the three-legged stool we had before is, if we just get a couple of pretty good days, they can go from, instead of 0 to 20, 20 to 40 without a follow through day. And that's where we were kind of stuck before, is we had to have a follow through day. Imagine the market goes all the way to new highs without the metrics of a follow through day. Then what, right? Then you just, once it gets to new high, you say, okay, market and confirmed uptrend, and you've missed some meat on the bone along the way. So I would play it close to the vest. I have a few longs that I put on today, and I still have I think I have one short. Yeah, one short. And I'm not over my skis. I would bet I'm maybe 25% long and 8% short. So what's that? My net exposure, all things being equal, 17, 18%, something like that. So I just, the short side is tough. I was shorting yesterday because that's just what I do. But I was covering last night and this morning, and somebody sent me an email, and I happened to be up looking at the futures market at 1 a.m. Pacific time, and he sent me an email, and so I just replied to his email, and he was like, "Wow, I thought I got up early," and I said, "Well, when you short the market, it's hard to sleep." So the short side is really difficult. I think you have to be hyper vigilant on it. You just can't sit there like you can. Be more patient on the long side. It's just too difficult. I would have given back a lot of my gains from. I mean, last night the market was lower. I mean, the futures were down. I don't know exactly, but they were lower than where it opened. So you'd have given back a lot of your gains. Um, all right, I think that's enough on the indexes. We're kind of in no man's land is the message. Okay, so let's look at a couple of trades. We've got UPST on the short side, and EOSE was a long trade. So let's go to UPST. And I do short stuff like QBTX actually was a pretty good short for me. When they're doing this, I've just been around too long. That it's really difficult. It takes me sometimes 5 or 6 tries, and I might have to put 100 shares, 100 shares, 100 shares. But I just know that when that's going on, this is usually what happens. Now it's, once it breaks like this, this is almost 100% off the low, 50 to 98. So it's just really difficult to stay with that. So you have to be, but I do short like that, but it's a lot harder. The right way, honestly, if there is a right way to short, and that's a good question. If there is a right way, is let the stock break, let it rally to the moving average, let it break again, let it rally to the moving average, And then once it starts to break again, you put it on. So that right there. So on the daily, so you have this bad break and it's earnings related, which is nice because you get the earnings out of the way. You don't have to worry about that. Tries to rally, can't really live above the 50-day. Breaks again. Doesn't quite undercut, rallies up again, but you can see how it runs into a wall there. And then the 50-day starting to turn down, which helps. And then once it starts to roll over, ideally you start shorting here. And for me, it's really like a hummingbird will feed. I literally sometimes 100 shares, just go short 100 shares, just so I'm short it. And then if it breaks, let's say 1,000 shares is the correct position. I might short 100 there. I might short 300 here, and I might short the last 600 there, like almost a reverse pyramid. I will do that if the price is going for me on the short side, and I do the same thing on the long side. So then when it breaks, and it doesn't look like much, but this is 47 to 55. So it's 8 divided by 47. That's 17%. So that's hard to stomach. So I'm usually peeling off. And then if it breaks again, then I'll put back on what I've peeled off. And then when it gaps down, I tend to cover it. So I didn't capture the entire move, but I'm basically short from like 65 to 40. And with, moves, maybe it took me 20 trades in between for a single account over that time period. And 65 to 40 is what, about 35%, 38%. So it's a pretty lucrative trade. So that would be a good trade as far as the short side. Bad trade, was it EOSE? And I think I might have talked about this already, so I apologize if I'm repeating myself. But it breaks out of this right here. And then I remember Bill had an old saying, Bill O'Neill, the founder of IBD, he would say, if it breaks out of a nothing, it should be sold. So when this stock breaks out of this, what is that, right? It's a nothing. It's too short to be a cup. There's no cup with handle. It's too deep to be a flat base. 19 minus 13.45 divided by 19, 30%. It's also too short to be a flat base. I don't think it's in the correct number of weeks. 1, 2, 3, 4. Yeah. So it breaks out of a nothing, and I should have been selling into that. And I was a little bit, but I kind of just got FOMO that it was going to do something like this again. And I was going to be left selling at 19 and watch it go to 25. So I got stuck in it, frozen. And this was tough. And this was very much like yesterday, right? You get a bad break like that on the stock, and then it tries to rally, and then it's just another bad break. And that's pretty much game over. And so I got out of this very poorly, unfortunately. So that turned out to be a bad trade. Not only the missed selling opportunity, but I just was not quick enough to react when it became fairly obvious in a short period of time that something was wrong. It was under distribution. Somebody was using that strength to try to get out because I think it opened around 18, ran to like 19 and a half, if I remember correctly. Yeah, 1965. And then quickly was like 19, 18 and a half. And what's happening probably is somebody is using the strength to unload, and then they're not getting any of their shares off because there's no demand at these higher prices. So they're having to take lesser price, and then they almost become anxious or price. It's the right word I'm trying to think of. They don't care about the price. They just want out at that point. And so then 19, 18, 17, just get me out. And it could just be, 500,000 shares, 400,000 shares, something like that a fund has. And there's just no takers. And so that's turned out to be a bad trade. Okay, so let's go to stocks to watch. Let me I think I have these written down, but I'm going to take a quick picture of these so that I know which ones to cover. And okay, so let's start with BE, which is Bloom Energy. This I think this company is doing something that could be pretty significant. So this is kind of my go-to stock when I think the market's going to rally. So I was a buyer there and a buyer here, but I'm also because I feel like I'm a little late in the game. You know, I should still be holding my stock I bought. I apologize. Uh, I didn't buy that day. I bought somewhere here because this was a little shakeout day on the earnings. Um, I should be holding some of that, but I'm not, and it's just a part of my patience that I need to learn. But so I'm pretty quick to if it take chunks of it. So I've done pretty well with it, but I bought it today, and it's a little broken. I'm not sure I'm doing the right thing here, but the market doesn't like to go down. So I want to give the benefit of the doubt to the market. I want exposure. So that's why, it's a 6, 7, 8% position, something like that. I don't know. Maybe it's 10. It's nothing more than that. And it did close in the upper range today. I have pattern rec off. What's that? It's got to be like 80%. Yeah, 76% the closing range. You need the pattern rec on to have that. Basically, what closing range is, you see CLS range. Most of you probably know, but if a stock trades between 190 and closes at 100, its closing range was 100%. Closed at the absolute highest of the range that day. If it closed at 95, its closing range would be 50%. So it gives you an idea of, does it close in the upper half? Pretty much. It's really a good indicator on weekly charts. Bill used to be look for these as support, and he was a little bit more lenient. He was looking for 40%. So this closing range is a little lower than I would like, or that Bill might have liked at 33%. But it looks to me with that volume, it's possible that it was a support week, and I believe it to be a support day. But let's see. I'll need it to start to get above these moving averages. Let's see. But so that's Bloom Energy, and there's a lot of beaten up stocks like this. This is one of the better ones, I think. It's off 39%. So NBIS, oops. So you can see kind of it tried to undercut here, tried to get going and couldn't. So this one looks broken to me. It would be an avoid for me, down 41%. Hood, I need to get my glasses on. I cannot see this list I made. I just think it needs time, but this was one of the leaders, and if it needs time, it's down 30%. So this is, one of the leaders. It was one of the first to get going here. It's down 30%. Palantir, one of the first to get going. It's down 18%. Not too bad, but 18 versus 8 on the NASDAQ. CoreWeave was on this list. I don't believe it to be a leader anymore, but I'm curious about it. So look at CoreWeave and Circle. This is my fear with IPOs, is this just became, for lack of a better term, a pump and dump. And that's the problem with IPOs, is they just become, I'm not an expert on it, but it just feels like an exit strategy. When OpenAI goes public, and they're going to go public at, let's say $1 trillion market cap, how much meat is on the bone for you, for me? Uh, Maybe it can double again, maybe it can triple. I don't know, but it's not going to go up 50-fold like a Microsoft did, or Cisco, or Google, or Monster, and that's a function of the private equity or venture capital markets. There's just so much money out there that these companies can grow without having to go public. It's a shame. I wish that wasn't the case, but it is what it is. I cannot change that. Here was Sim that was on that guy's list. Uh, Again, leader and looks broken, 36%. How about Credo? 31%. I don't know. I don't think I would. I mean, it's okay. I do like the fact that it undercut these lows and then closed near the high. Um, I wouldn't fault anyone for buying that if they really like the story. I believe Jim Robo might be in this one. I'm torn on that one, but A Lab, this down what 40% off the highs, 46%. The math is starting to math on these on this kind of pseudo bear market. It's been like almost a stealth bear market in the last handful of weeks. INSM, wow, super good. I just don't know where to buy it, but man, holding up good. Definite leadership. UI, I think the last time we looked at that, it broke. Yeah, a total avoid for me. Fix, not too bad. I see, it's getting support. It feels like there's buyers in that. I would be maybe a little bit more price upside, but that one doesn't look too bad. Oracle is it, see, this is a strange bear market. I mean, they announce this whatever this deal is, and it's incredible how dynamic and fluid markets are. So they love it at 345. It's gapping up. It's one of the biggest companies in the market, and it's gapping up 35%. And I just remember thinking, this is just not sustainable. I did not know it was going to do this. Obviously, I shorted it. If not this day, the next day, and compared to where it is now, I took pennies on the dollar. But this is a message. It's a message from the markets, down 42%. Oracle, um, SanDisk. Um, so just an incredible run, and trees don't grow to the sky, although this one grew pretty well. It went up fivefold, 50 to 250. Needs time, looks broken. Not a high tide flag, I don't think, but maybe you think so. It's down 30%. That would be pretty deep for the pennant, but who knows? Let's see. I think that it's just got ahead of itself and it's going to take some time. It would be an avoid for me. MU. So they finally got MU, but if you forced me to buy SanDisk or MU, I definitely would buy MU. And then how about Western Digital? Not too bad either. So I would buy that one versus SanDisk if I had to. But I'm on the outside looking in on those. Tesla. This is the one at stock I am short with the I'm short through an ETF. Um, I don't know. I'm not enamored with it, but the only reason I stayed with it is it didn't open that strong. It wasn't down that much where I felt like taking profits either. And since I took off all the other shorts, I figured, you know what, if this one goes against me, that's fine. I've taken off the other ones. And it didn't really participate in the rally at all. So there's that. Um, Oklo, I might have mentioned this one a little bit, but that looks broken. That's an avoid for me. Rigetti, I think is an avoid. But who knows? Maybe this is all very, very good. If Rigetti's changing the world, I mean, this stock went from 3 to 50. Okay. If they're changing the world, if they're doing something that's really, really, really great and it's going to lead to all these profits and earnings and sales and all that, guess what? It's going to build a base. It's going to give you another chance. So if you missed it here, you got a chance, right? It's corrected 59%. So plenty of chance for it to build a base. It might take time, but it's out there for it. Ion Q, the same thing. Baba. So weekly doesn't look all that bad. I think I would like to see some strength. I don't know. I don't know what to think about Chinese stocks. I'm just right now they're on my no-go list, but I'm flexible to change. I'm open to change. AMD is giving back a lot of the gap up, which you wouldn't want. And AMD tends to do that. Like if you look at AMD, it breaks out and then builds a massive base. Breaks out, builds a a pretty good base. That's, 30%. Breaks out, builds a massive base, breaks out. I don't know. I don't do well with AMD because I'm always fearful that it's going to keep repeating the same process. SoftBank, so definite AI kind of bellwether stock, and bit of support day today, but what's that? 30% off the high, 38. Okay, Meta broken. Do nothing with it. Just watch. Uranium stocks. No, broken. LEU. Nope. Needs time at best. Carvana. Hanging in there. Not too bad. Newmont. Gold stock. I would want higher prices before I would get involved. What does AEM look like? Again, I would want higher prices before I get involved. Sting, I do own Sting. This is a shipper. So it broke out, pulled back. Um, looks pretty good. I do have a position here. In the same group as TNK. I do not have a position here. I did own it and panicked out yesterday of that one and didn't buy that back. I bought Sting back today. Um, NU, which is what Brazilian bank. It looks good. I like it, but it never goes anywhere. So a couple of times I've tried it. I tried it. It gets these big blue bars. Like today, it was up 3.75%, but it never follows through. At least when I've been in it. So it's on my list, but I don't know what to do with that. Al, this could be a bit canary in coal mine. So you got Al, you got Apollo, APOL, or is it APO? Apologize. Apollo, Blackstone, is that BLK, or BlackRock is BLK? Is BlackRock. Blackstone is BX, I believe. And these are, they got their hand in the cookie jar on private equity and credit and all that. So they're ones to watch, I think, as far as that, if you're interested in that side of the coin. If you're just a strict trader, investor, and IBD methodology, I'm not sure if there's any value add to all of that. Sometimes I feel like it helps me, and sometimes I feel like it hurts me. So, all right. So let's do the quote of the week. Jawad Mian, he has I don't know if you'd call it a blog or a newsletter called Straight Reflections. And I get, his, first part of it, his newsletter, and then, it's behind the paywall. And so I get the crumbs, so to speak. But in the crumbs, sometimes there's some gems. And he says, investing done right is boring. Your function is simply to execute your edge, but our minds crave stimulation. Yeah, that's one of the reasons why, sitting in front of the screen is not an advantage sometimes. We convince ourselves that doing more and trading more will lead to earning more. That's a good line. Doing more and trading more will lead to earning more, right? Because if you feel like if you feel like you have an edge, then you want that edge to play out more often, more occurrences, right? If we're not taking positions, we're missing opportunities. The best investors I know have built the muscle to do less. They wait, they observe, they reflect. Really hard to do for me. Mostly for me to do that, I tend to just get away from the quotes. Just turn them off or go down. I've got two computers here. One I use for work, one I use for my stuff. Sometimes I'll just start doing work and not look. I can, if something happens, I'll alert will go off, or I'll hear a ding or something. I can worry about it then. They observe, they reflect, they open positions only when criteria are met. So I'm not very good at this, which is why I like this quote. I'd like to get better at this, like the BE trade. I'm not sure it met all the criteria for me to put that on today, but I did. The couple of other times that I put it on, and truly met the criteria. So maybe I have a little bit of a pet stock syndrome with that one, but um, keep that in mind when you're putting on positions. So patience is the key. If you look at markets where some of these stocks that we've been in have gone, now it's very difficult because the math is cruel. Like Oklo, I think I was buying that at 11 the first time, and now it's 90, so it's up whatever. But it's 50% off the high, right? So, but it is so that's the hard part to stomach those pullbacks. There's a happy medium somewhere. I'm not sure where it is. Take a little bit off, you leave a little bit. I'm not sure what the number is for all that, but I feel like there's definitely got to be some kind of happy medium for that. Okay, so next week is Thanksgiving week. Probably no take on the market on Friday, barring some unforeseen circumstances in the market. You'll have Harold and Arnie are coming up very soon. I don't know if they're next week or the week after for their 2 cents on the overall market environment. 800-831-2525, market surge at investors.com. Thanks, everyone. Have a great holiday, and we will see you most likely in a couple of weeks. Bye bye.